Okay, there's the price of Bitcoin, which is under pressure following a historic win for those in the crypto community that have been agitating for the last 10 years to get an ETF approved. Suddenly, there were a lot of them. 11 have been approved in total. One of them is the Invesco Galaxy Bitcoin ETF. Steve Kurz is global head of asset management at Galaxy, which of course has been doing work in crypto long before this date. And I would love for you to talk about what that moment kind of felt like, and as you were preparing for it, because Galaxy has such a legacy in crypto, the teaming up with Invesco, which is of course a different beast altogether. How did that come about?
Yeah, sure. And look, it was a big moment for Bitcoin, and it's a big moment for the ETF industry in the U.S. And so I think there was a mix of pride and relief, and we're happy to be here. So, the conversation with Invesco was very similar to the conversation with CI. We have a long-standing partnership with CI in Canada where we manage multiple crypto ETFs. And I think there's just a really nice pairing between a large issuer that knows how to take products to market. They have distribution forces, and they really think forward about innovation and unlock new asset classes. And Galaxy has that domain expertise on the crypto side, on the Bitcoin side, the trading, the ability to educate and to contextualize crypto in a portfolio. So it really did fit nicely philosophically, and that's how we're approaching the partnership in the U.S. with Invesco.
Fees seem to be the name of the game, right? And you guys have, through your ETF, zero fees. Am I right, for the first 6 months?
Yeah, that's right. We were actually the first ones to put the fee waiver out. I think fees are always important in ETFs. I do think that the main thing for investors to think about, though, is not just the fees, right? This is a volatile asset class. Bitcoin is coming down in its volatility, but it still has more volatility than other asset classes. So I think investors should really be focused on fees always, but also on slippage and execution. We've been very good at tracking products in Canada Bitcoin. And when you're talking about 1,000 basis points of difference between us and our largest Canadian competitor, a few basis points of fees really doesn't seem that impactful in that context.
Well, let's talk about all these other products that existed before this moment. There are those ETFs in Canada. There were other kind of like Galaxy, but also ETFs that were focused on the miners, trying to get at the crypto space. Now that there's this more pure play way that fits into traditional types of portfolios, are you expecting a bit of a cleanup of everything that was there before? What survives?
I think there will be some cleanup. You'll see that in the European market where it's more of an exchange-traded note, not an ETF. But in Canada, I actually think these products are going to continue to thrive, and the U.S. products are going to function very similarly, actually, to the Canadian products. The SEC chose to go with a cash create model. We've been doing that cash create model for 3 years with CI. And so I actually think that's a great opportunity for those funds to continue to get exposure to Bitcoin in a very efficient way. Those products are liquid, and Ethereum as well. So I think depending on which market you go to, I think the European market's very different than the Canadian market. And I think some of that ancillary stuff, the miners, et cetera, that may go away as well. But the pure play Bitcoin ETFs in Canada, the pure play Bitcoin ETFs in the US are not going anywhere. And they're great exposure vehicles that track well to Bitcoin and to Ethereum in the case of Canada.
What comes next after this? What's the next big product for the crypto community?
Well, I think if you zoom out, what will happen over the next few years is we will look back and say this was the beginning of a regulatory framework that's more clear in the U.S. And so that's not going to happen overnight. And I think that has a lot of implications. What we've obviously seen already in the last 24 hours, because crypto moves fast, you've seen a catch-up trade with ETH to Bitcoin. There was some underperformance of ETH relative to Bitcoin in anticipation of the U.S. listing. There's a lot of talk of Solana. We've been engaged on that conversation for a long time. But I think most importantly, there's a real trodden path for how to become an institutional asset in crypto before you have an ETF. It starts with listed futures in the US. Then, there's the Canadian ETFs, of course, which have been leaders from the OSC over the past few years. Then you have futures ETFs in the US. And then finally, the holy grail, you have the spot ETF in the US. So I think an Ethereum ETF is going to take up a lot of the discussion over the next months and quarters in the US.
Vanguard isn't going to make an ETF, isn't going to offer any of these to trade. You got even JP Morgan coming along, right? There, even though it's kicking and screaming, according to Jamie Dimon, but the House of Bogle is not coming along. Is that significant?
Well, look, in a way it is, and I guess I would also say on the JP Morgan side, we have 6 authorized participants for our U.S. listed fund, including JP Morgan. And so, there's what you say and there's what you do, and I think everyone should focus on what's being done. I'm not sure you needed another issuer. You had 11 issuers come to market in the U.S. Every institution is going to have their approach to it. You do have Invesco as a top 4 issuer in the U.S. You have a number of large names. Obviously, you have BlackRock in the mix. So I'm not sure what Vanguard would add to that. We're much more focused on the access of these ETFs and getting into the bank platforms and the institutional wealth market. Remember, that's a $48 trillion market in the US, and it's been largely untapped in terms of crypto and Bitcoin more specifically.
Is it just a little bit antithetical to what Bitcoin was all about when that white paper came out? It was supposed to be this beautiful, decentralized thing, unsullied by the hands of traditional finance.
Here's why it's not. There's a Bitcoin pub in New York City that we sort of congregated at last night to celebrate, and I was wearing this jacket, having had a day like yesterday, and I had this argument with a lot of Bitcoiners. This is precisely what Bitcoin was made for. Nothing about the Bitcoin network loses. In fact, everything about Bitcoin and the story of Bitcoin and why it needs to exist benefits from having ETFs and wrappers on top of Bitcoin. Bitcoin can be used for different reasons in different ways all around the world. It's still a robust, decentralized system that lives outside of the system. The fact that ETFs sit on top of it and wrap it is good for the liquidity of Bitcoin. And it's great to be able to tell the story and have conversations like this where we educate on what Bitcoin actually is and why it matters.
All right, Steve.